What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a DBGI Technicals update. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community, ARCab, on Discord. With that said, let's dive right in, you guys. Okay, so DBGI, you guys, has faced some serious downside. We were actually talking about, in the last video, we were talking about a potential downside coming in based on the fact that we were seeing these long wick candles, you guys. This usually doesn't look so good. Now, the potential for us to drop was actually not this low. We were looking at a drop to the triangle bottom or the descending broadening wedge bottom, you guys. So now we are following the golden rule of three, which is usually something that I talk about often here in this channel, you guys. So what I mean by that is we're in this formation, particularly to formations like this, we're looking at a test, one of the resistance, 2 and 3, followed by the largest capitulation event that test number 3 has to offer before a test of a true breakout on test number 4, you guys. So okay, let's look at why this is happening, you guys. This is not so much company specific. And the reason why I can tell you this is because look at this candle here, and please look at the low volume that we have. This candle has very low volume. It's not even as, look at this large, massive red one. It also doesn't have that much volume, you guys. So whatever is happening here is broader market influence. And now I'm not sure if DBGI bulls know this, but if we can just pair this with, for example, BTC, let's go ahead and look what happened. You can see right here. Let me put us also in a line chart so then you can gauge an understanding. As you can see right here, we started selling off right when BTC faced this capitulation event, you guys. So BTC is facing a liquidity crisis right now based on the FTX platform not having enough money or not having enough liquidity, you guys. So they're actually pressuring the markets to the downside. With BTC doing this, it influenced the SPY, it influenced the NDX, and every mega cap under the sun as well, you guys. So Tesla is also facing some downside. I mean, we can also add Tesla in here if you like. Let's go ahead and put it in a new price scale, and you can see. So Tesla, look at this. Doing the same thing we're doing, you guys. It's not company specific. Please be patient with what's happening, you guys. What's happening is broader market based. So, and it's also, I mean, we're facing economic data release for the CPI metrics on the 10th, I believe, and then we have midterms, the formal presidential announcement on the 15th, you guys. So there are things that are working against the play, and we do have to practice patience and, most importantly, practice risk management, you guys. So that whatever is happening here, you guys, does not mean that this formation, which is a bullish reversal signal all on its own, does not mean that it's over, and I'll tell you why. We have not closed a daily candle below the support. So in order for us to be able to continue or consider a downside continuation would likely be based on a candle closure below, and I would say, let me put a metric. Yeah, we need a candle closure with no wick in the inside of the formation below $5.08, you guys. So if we do have a daily candle closure below this area, actually 517, if we do have a candle closure below the 517 point, then yes, very likely we can see a downside continuation, you guys. Okay, so we definitely need candle closure below the support. So let's go ahead and move on to the next chart and see what we have, you guys. We did notice that we were in a bearish, a bullish and bearish right-angled broadening descending wedge, you guys. So these right-angled wedges present both an upside target and a downside target, which is why we had an inverse fib from the high, which is right over here, you guys, and to the downside, which is where we were looking at as our low. So we took an inverse fib to catch our downside, and we actually caught a regular fib to catch our upside as well, you guys. So now this trend line is actually applied this is how we can be able to get our price objective for the breakout. We take a trend line from the highest point of the wedge to the lowest point of the wedge from where we broke out, and we apply it to the bottom side to catch that price objective. Now, as you can see here, I'll add a trend line at that target so you can see just what's happening, you guys. So you can see here that we're using it as support. We use it as resistance, and then we broke out of it again, and then we came back into it, and now we use the support again before a continuation onto the upside, you guys. So this target was very, very accurate into what was happening within this setup right over here, you guys. So again, we definitely don't ever like when we're starting to see inverted hammers like this at the top of a trend with long wicks to the top, like long wicks to the top, you guys. This is a bad sign. We can see a potential downside coming in. Another thing that we do have to consider is that we are in a series of lower lows and now lower highs. Okay, so you can see now that we're just printing these lower highs. Now there is a sense of market, a break of market structure here, but that does not defeat the fact that we are following this trend right over here, and look at all those candles touching that. Okay, you guys, so there is the potential to where we're now in a different type of formation, but we have to put in some more time, put in some more analysis into this and see what's actually going on. But that doesn't mean we can't catch a bias in direction for the immediate short term. Let's go ahead and look at the 30-minute RSI. New listeners, this is the bullish control zone, upper half of the other RSI, and this is the bearish control zone, bottom half of the RSI, you guys. So now what you're looking at here, I'm sorry, one more thing. The inner workings of either zones is the weakness percentile, and the outer workings is the strength percentile. Okay, you guys, so what you're looking at with this RSI signal facing straight to the right is very much in line with literally every other ticker in the market right now, you guys. And this is likely in respects to the economic report coming out for CPI and midterms. Everything is at an indecision right now, you guys. So we do have to practice our risk management and caution within the trade within these areas. I will not be playing a midterm play or will not be playing a CPI play, you guys. Please also know that I am not a financial advisor. I can't actually suggest for you to buy or sell any assets. Well, please take whatever I do say within these videos and whatever I do show as a form of entertainment. I need you guys to do your own DD and we'll be okay, right? Okay, you guys. So the 4-hour is also reminiscent to what's happening for the economic report and the broader market space, you guys. So it's also no bias in direction. Now let's look at the 8-hour. The 8-hour is suggesting a continuation onto the upside. It has reached the very, very shallow areas of the bear strength percentile, which can likely gravitate us towards the top. But this is the 8-hour RSI, so this is likely to play out either by the end of the session tomorrow or the following session, you guys. Now the daily RSI is also suggesting some sideways, and it's slightly an upside pivot, you guys. It's bearish because we are beneath the moving average. Excuse me, you guys just drank a lot of water before the filming of this video. But yeah, you guys, I do not suggest any type of entry within this as we are seeing an entire amount of indecision. But what I can say is for you to just make sure that your stops are in if you're already long in the position. The stops are there so that we can be able to survive another trading day, you guys. Know that you keep on hearing about risk management and you keep on hearing about trust the process is literally because those are the most important facts about trading, you guys. They are key elements for us to be able to survive. We don't trade on emotions, we trade on data. Okay, you guys, we trade on signals. We trade on what the chart is saying, not with what our emotions are saying. We let the market speak the psychology, and we then evaluate that psychology and make a conscious decision. Okay, you guys, but with that said, this is a pretty good place for me to leave off the video. If you have any questions or concerns, don't hesitate to reach out to me on Discord, on Twitter. I'll make sure to leave the links in the description below for you to consider trading with us in the trading community, ARCa on Discord, you guys. But with that said, I wish you a good night, and I'll catch you at the bell mañana. Adios.